One of the biggest news to come out of banking and finance from the budget is the government confirming that RBI will come out with its own central bank digital currency or CBDC in the coming financial year. And with this, India joins the growing ranks of countries that have their own CBDC. Don't confuse this with the cryptos, those are private. CBDCs are actually backed by the government and is just like any other money that you have in your pocket, only that it is going to be digital in nature. The second big announcement is the extension of the Emergency Credit Line Guarantee Scheme to help hospitality and other related sectors which have been impacted by the pandemic. The government has allotted 50,000 crores more under the scheme to take the total to 5 lakh crores. In a further move to help MSMEs, again, who've been the most impacted, the Credit Guarantee Fund Trust for micro and small enterprises has also been expanded. 2 lakh crores more of loans can be given out under the scheme to help create employment opportunities, help the MSMEs. Also, 100% of the post offices in the country will now come under the core banking system, which means now post offices which have about 10 crores of deposits can get access to online banking, to ATMs, to net banking. All of this again is to boost the adoption of digital even in the rural areas. Further, all scheduled commercial banks together will set up about 75 digital banking units in 75 districts over the course of the next few years, again, to push digital banking into the rural hinterlands of the country. And lastly, the Insolvency and Bankruptcy Code, which is barely 6 years old. There are some changes which are proposed to it, but most notably cross-border insolvency, which has again been a long-standing ask of the industry. That is expected to happen this year. Now, equally important was what was not announced in the world of banking and finance, most notably the privatization of public sector banks, which was announced in the last budget. There was no mention of it in this budget at all, and even the bill to amend the Banking Regulation Act to ensure that the government can bring down its stake in these public sector banks was not introduced. So that remains a question mark. Again, the big thing to watch out for has usually been the infusion of capital into public sector banks. That was also absent this year, but that was again on expected lines because public sector banks in general have been performing better and bad loans have been coming down.